Hello everyone, a very good Sunday afternoon. My name is Ramesh and I welcome you to yet another session of OrangeTee and Thai's Consumer Empowerment webinar. I would like to start the session with a special message to all the mothers tuning in. Happy Mother's Day. Here's wishing you all the love, health and happiness that you so much deserve. You will always be our superhero. Thank you also for taking time off today to join us for the webinar. OrangeTee's Consumer Webinar Series is a new initiative that aspires to empower every potential buyer or seller out there, the latest market news and trends right from the comfort of your home. Our carefully selected speakers in this series will be sharing with you key insights and latest research in the property market to help you make informed and prudent decisions on your future property plans. And I must say, it's really encouraging to see so many listeners tuning into a webinar session this afternoon. Today, you're in for a real treat as our speaker for today is none other than Ms. Jeslyn Tan, Head of Research and Consultancy at OrangeTee and Thai. Christine has more than 20 years of research and consultancy, sales and marketing experience. Having worked for a few leading developers and real estate agencies, she has garnered vast experience across the residential, commercial, hospitality, and industrial sectors. With a strong marketing background and having handled more than 1 billion property sales accounts, Christine's research work is highly market relevant and consumer-centric. She is sought after by developers, investment firms, banks, and for consultancy services and property advisory. Her analysis has been quoted by Bloomberg, Reuters, BBC, CNBC, International Herald Tribune, South China Morning Post, and global media platforms in Europe, United States, Canada, Australia, China, and many parts of Asia. Despite her long list of accolades, she still thinks one of her biggest achievements to date is being a mother. So happy Mother's Day to you too, Christine. The topic for Christine's talk today is Investing in Crisis, a Profit Analysis. She will be sharing with you her analysis on how properties that were bought during previous financial crisis has performed over the years, with an in-depth analysis of the profits and losses generated for these properties. A gentle reminder for the listeners tuning in, if you have any questions pertaining to the talk or property market in general at any point during the session, all you have to do is click on the Q&A option at the bottom of the screen and type in your questions. We have on standby a panel of real estate veterans and experts to answer all your burning questions. And you can ask these questions during any time during the session. You can also address your questions directly to the speaker, Ms. Christine, which she will be taking after her presentation. I think I've spoken enough. I'm sure all of you are waiting eagerly. So without any further delays, please invite Ms. Jeslyn Tan. Thank you.
Hello, everyone. Thank you, Ramesh, for your wonderful introduction. Before I begin, I just want to say again, a very happy Mother's Day to all the mothers out there who is tuning in right now. I hope you had spent a very good weekend with your children and also with your family. Okay, so thank you very much for tuning in today. Today I'll be talking about this topic, investing in crisis. I think this is a topic that will be of interest to many people because I think it's not something very unusual that we're talking about crisis right now, because every day when you read the papers, it's talking about economic slowdown, even a global recession may be coming and so on. But beneath all these things that is happening, all the negativism that is in the market, we believe that there are still some opportunities out there, because definitely over the past few weeks, we have been receiving a lot of inquiries from buyers who were quite interested to find out what sort of investment opportunity will be out there. So in order to answer this question, perhaps one way is to look at how properties have fared over the past few years, especially those that were bought during the last crisis. So what we'll do is that we'll be coming from a research or data perspective, that we'll be looking at how some of these properties that were bought during the last crisis, 2008, what type of profit or losses that they have made. And from there, we will then look at what are the kind of properties that we can look out for if you are interested to buy one during this period of time. Okay. So how will recovery look like this coming maybe months or even the coming weeks and so on? I think this is something that I don't think there is still a consensus, because things are still quite uncertain right now. Some people in the market thinks that the recovery could be a V-shape. because they feel that, you know, once the all the cooling not cooling measure all the restrictions that have been removed, the border controls, you know, people start traveling, perhaps the recovery will be quite fast. But there are some people who think that it could be a Nike swoosh, you know, it will take some time for it to go up. The other one that may happen is a U shape. In fact, some people say it could be a prolonged U. And even this one, this is something new. I've never seen this, but yesterday I saw this, the square root, okay, where the recovery will be a V shape and then after it will plateau. So this is quite interesting. If you want to see, okay, what this whole thing looks like in terms of GDP growth, this is something that I got from Bloomberg, where they talk about what will be the kind of recovery that we will see for the US GDP. So if you look at this chart, it shows you the V shape here, or it could be the swoosh here, or even, you know, a prolonged U. So what is going to happen to Singapore's GDP growth, and what do you think will be the recovery like? So later on, we will discuss more about that, okay? So, but if you look at Singapore's, in terms of property prices, it's also quite interesting, because if you look at all the past crises, for instance, like here, Asian financial crisis, or even the dot-com bust 911, or even here, the global financial crisis, you'll realize that it seems like it's quite a V shape, okay? And there's actually a quick recovery of the price index, okay? This is a URA price index that shows you the price movement of private properties. So this is something that you may want to look at it, okay? But the interesting thing that you may want to note is that if you look at this, okay, at every bottom of the price drop, you'll see that it's still higher than the previous bottom, okay? So I have some friends who ask me, do you think that for this time round, prices will go back to the previous level? That means we'll see perhaps, you know, prices of homes, private homes going to maybe 700 or 800 per square foot and so on. But if you look at this trend, it may look as if like, even if prices is going to fall, the bottom may still be higher than the previous bottom, okay? So this shows us that perhaps there is a good capital appreciation of private homes in Singapore. So what is happening to the market right now? Okay, we know that there's been a lot of news about what's happening to the dormitories in Singapore, circuit breaker measures and things like that. But if you look at the property market, we find that something is quite interesting to note, especially ever since the pandemic started in January. Of course, it started overseas, perhaps in the later part of last year. But in January, I recall, even during the Chinese period, people were already talking about pandemic. And even for our company from February, we started doing like some safe distancing measures, and things really kicked up quite a bit in March. And then, of course, we went into the circuit breaker measures in April. So with that, you know, there seems to be already some uncertainty happening this year. But even then, these are some of the recent headlines that has grabbed the attention for the property market. For instance, if you look at this article that was cut out in February, this developer, Wing Tai, is sold 70% of their luxury property, the M, over the weekend. And we're not talking about, you know, 70% of 10 units launched, but they are talking about 70% of the M, and that equivalent to around almost 400 units that were sold over 2 weekends. And these are all luxury homes. And the other prominent developer is Chimik Singh. Chimik Singh has also launched a property around, I think it was March or April. And this was, again, another headline. They sold 77 units at Copa and Newton during that period of time, okay? And in fact, if you look at some of these pictures, you can see show flats, they were packed, and as well as people standing in the hot sun, queuing up to buy luxury homes just 2 to 3 months ago, or in fact, even less than that. So this is just before the circuit breaker measures. So that brings the question, why are people buying properties right now when things seem to be a bit uncertain? And in fact, I was just talking to one of the international reporters just 2 days ago, and he was asking me, he noticed that there is also a trend that the landed property or the landed segment seems to be picking up, because we do see landed properties being sold recently. So again, this is a question that comes into people's mind. Why are they buying properties right now when we don't know what's going to happen? And this is another very interesting article. Just 2 weeks ago, attention grabbing because it shows here in Singapore, there was a British expat that paid $10,000 per month to rent a swimming pool. We know that during the circuit breaker measures, all the condo facilities are closed. And because of that, some of these people, expats, they cannot use the facilities. So what this person did was that he has decided to rent a swimming pool in one of the bungalows in Sentosa. And he has decided to pay $10,000 per month in order to use the swimming pool by himself. Okay, so this is really mind-blowing because it's really extraordinary, especially in times like this. So the question will be, why are people doing this kind of things? And a lot of people are asking, is it the best buying opportunity right now? I like to quote this person, who is Warren Buffett, because we know that he is a great investor. He's good in investing properties as well as stock. And he always go by this saying, be fearful when others are greedy and be greedy when others are fearful. This is something even for myself. You know, during the last crisis in 2008, I also took the opportunity to buy my second car. And that's when I bought my car for almost half the price of what it is worth right now, you know. And of course, it's also a good time to pick up some very good stocks because they are undervalued, buying blue chips and things like that. So does it mean that during a crisis, everybody will be exiting the market? Okay, so this is something that is quite common. We see bargain hunting abound in previous bear markets. So this is a chart that shows STI Global, the index, where it shows that during a financial crisis, for instance, like Asian financial crisis and global financial crisis, you can see that prices of stocks in Singapore has dropped. And so it happened in 2008. But trading volume actually goes up during this period of time. You can see that there are actually a lot of people coming in to buy. In fact, the trading volume, if you look at here, is even higher than all the other periods during the so-called the boom time and so on. So why is it so? Why is it that we want to look at the stock index? Okay, there has been quite a bit of study that has been done in the past where they talk about the STI index may be an indicator of what's going to happen for the property market, because they do find that if you look at the property price index and the STI index, both of them mirror each other quite closely, and there is a lag of maybe about 5 to 6 months, because we know that the stock market is always forward looking. They will look at, you know, how investors think the market will be moving in the next few months, and then that's when they invest in the stocks. So in that sense, you know, when we look at the STI index, it can give a bit of gauge as to perhaps what may happen in the property market. So right now, we will look at the trading market right now, what's happening. And this is something that if you have been following the stock market, you'll see that STI actually fell off a cliff, right? Over the last maybe around 1 month plus ago, and where it touched the bottom and it has not reached that level for a while. So during that period of time, what happened? Did all the buyers all left the market? But what we saw was that right now, if you chart this one, okay, the STI index together with trading volume, you can see that there is actually a big spike recently. Okay, many funds are coming in to pick up stocks. In fact, some of the companies are coming in to buy blue chips, and we see that even Temasek themselves are coming in to pick up stocks. So what does this indicate? It indicates that during a crisis, there are actually opportunistic traders who are entering the market in search of profits. So this is something that is very interesting. If you look at this whole chart, it shows you that during a crisis, there are actually many people coming in, not only people who are, there could be certain risks involved, but if you're looking for something good to buy, perhaps this might be a good time, okay? So with this, what happens to the property market then? Okay, let us look at the past. This is a chart that shows you the URA price index, okay? This is the orange line here, shows the price movement of private homes as according to URA index, okay? So it shows the movement. And the other chart here, the green bar here, shows the GDP growth for Singapore. So if you look at this whole chart, it shows you that right now we are down here, the first quarter of 2020. So this red bar shows you that looking at flash estimates, I think the actual data is going to be released quite soon. But if you look at flash estimate, we already know that Singapore may be heading into a recession. So down here, you see that it's a negative bar. But this is not the first time it happened. If you look at the past few crises, for instance, like the global financial crisis and H1N1, it was also a negative GDP growth, as well as 911 and Asian financial crisis. But what happened to the private price index? If you look at here, you see that whenever we go into a negative GDP growth, which may potentially mean that we are in a recession, you can see that prices of homes have actually dropped, okay, down here. And then the same thing for 911, there is a slight drop here, and then for H1N1, global financial crisis as well. So if you look at, if history has anything to go by, is it anybody's guess what's going to happen to the price index? Okay, already we know that the first quarter of this year, prices have already begun to soften for the overall property market in Singapore. But the other thing that I want to bring your attention to is that if you look at the negative GDP growth in Singapore, it is usually not very long. Usually it lasts for maybe 3 quarters or at most 4 quarters if you look at the past. So this may bring some comfort, especially for Singaporeans or even investors, to know that even if we are going to a recession, hopefully this time around is not going to be very long, because we know that although this is something that is very unprecedented, especially for the pandemic, this is also a first time that we have seen an unprecedented amount of stimulus that have been pumped into the economy to help to keep jobs afloat, as well as to keep the economy going. So this is something that is very good. Not only Singapore is pumping in a lot of money, major economies are doing all their best to keep the economy floating as well. So we are just of course, we are hoping for the best right now. But the other thing that I want to bring up is that I have some friends who are saying, oh, perhaps I may not want to buy a property right now because I'll wait for prices to drop maybe 1 or 2 years or even 3 or 4 years. But if you look at the history in Singapore, it looks like prices usually do not fall for a very long time, okay? Perhaps maybe just 1, 2, or 3 quarters, as you see down here, okay? So why is it so? Because when you look at sales volume, it looks like whenever prices fall, sales volume will immediately rebound. So this happened for Asian financial crisis, even in 911, as well as H1N1. In fact, if you look at the rebound, this level, let's say for example, is even higher than what we have seen over the last few years. That is during the positive GDP growth period. And it happened for the past few crises as well. So you can see that this is a very interesting phenomenon in Singapore, where a lot of buyers are not even waiting for a very long time. Immediately when prices fall during the first quarter, people are already charging into the market. So maybe I can share with you this one example of what happened during the 2008 crisis. So for instance, for this example, in 2009, Fraser Centrepoint launched this project called Caspian, which is located in Jurong. And this project was marketed at a very good price, around 580 to 650 per square foot. And once they launched at that price, I record even within, I think, a few days, they sold about 300 units. For me, at that time, I was working for Fraser Centrepoint, doing marketing at that time, at that period, and I was helping for this project. And I record that even at 12 midnight, people were literally coming to the show flat and throwing their checks. And by the time we processed the option, it was already 3 a.m. And that happened for a few days. So that is the kind of thing that you see in Singapore whenever prices come down even slightly. And the other project that is quite prominent is this project called Alexis at Alexandra. This is a project that is located at Queenstown MRT, and it was very popular at that time because this is a project with many small units, and with this small units, so it's easy for these investors who are buying for rental and so on. So again, when they launched this project, it was sold out during the height of the crisis, 100% sold within 1 weekend. And this is another project, 8 at Woodleigh. This is a project that I was personally doing at that time. And again, they sort of launched it slightly lower than the price that was selling at the time. During that period, the price was around 800 or 900 per square foot in the area. So they launched it just slightly lower, about 790 per square foot. And again, within 3 days, the whole project was almost sold out. And this is quite phenomenal, or really a remarkable achievement, because it was during the height of the economic crisis in 2009. And during that time, the MRT station was not even open. And you know that during that time, you know, for Woodleigh, the whole Bidadari was still a bare area, and nobody was not even sure what is the kind of master plan the government has for that project. So this is the kind of thing that we are looking at, okay? So in summary, if you look at this, while people are looking at perhaps the negative news that's happening, there is also one whole group of people who are looking at it from an opportunity point of view. So for instance, right now, if you have been following the news, you'll know that a lot of funds and even some of these venture capitalists, they're coming in to buy distressed firms, because this is a good time for them to buy you know, some of these buildings or properties at very good prices. The other one that I want to bring attention is that what about some of the other things like gold? So this is again S&P 500. It shows you the periods of recession and so on. But gold was one of the commodity where prices have gone up very much during that time. Another one that is very active right now are auctions. Okay, we do see that auction listing has been picking up. Distressed properties have been put in the market recently, and you can see that a lot of people are going in to buy some of these properties. Okay, and of course, for a person like me, I'm looking at COE. Okay, so I'm not very sure whether is this something that will interest you. But okay, so this is what my daughter taught me. Put 3 arrows to emphasize, you know, the point that I want to bring. So if you look at this, COE prices, if you can recall, it really plunged, okay, during the last crisis, 2008. And in fact, I don't know whether you can recall this, the $2 COE price. Okay, so this is something that I don't know whether it will happen again. In fact, the last month's COE bidding was being put off because of the circuit breaker measures. But I guess this is something that, you know, if you're not buying a building, you're not buying gold or properties, maybe a car, you know, could be something that you may want to look out for. Okay. So, okay, so with that, this is the kind of what's happening to the market right now. I hope I have already given you a very broad overview of what's happening. But I also remember somebody said quite a good advice. They say that if you really want to know what is the best thing to do during a crisis, the best thing is to look at the wealthy people, okay? Because the ultra rich, the wealthy investors, they are very savvy, they know what to do. So because of that, I went in to look at the market, and I wanted to see how is the luxury market doing in Singapore. So I went in just last week to look at the URA data, and I was pretty surprised to see this, because if you look at this chart from URA, okay, we didn't make up this number. This is really the caveats that has been lodged. These are new homes that has been sold in the core central region. And you can see that down here, Q1 of the first quarter of this year, which is from January to March, you can see that almost 500 over units of luxury homes have been sold. Again, what I mentioned earlier is that even in January, we already know that the pandemic has started. So this is the kind of thing that we're looking at. And of course, if you look at this, you know, over the luxury home sales have been picking up over the last few months, because after the cooling measures were implemented down here in the third quarter of 2008, after that it started picking up down here. So you can see that, you know, even with the pandemic going on, you can see that some of these wealthy investors are still coming into Singapore, and perhaps some of the projects have been launching at a slightly lower price. So this may explain why many of these people are coming in. So if you look at year on year, there is actually almost 200% growth in terms of luxury home sales over the last quarter. And what about the other segments? Like I mentioned just now, I look at the numbers, and it's true that even during the first quarter of this year, landed properties, is look at the sales volume, is still pretty resistant. For instance, if you compare with the previous few quarters. So it looks like landed homes are selling, and slightly lower level of non-landed homes. But if you talk about the total volume of those properties priced $3 million and above, it's almost touching the 5-year average quarter, which is pretty good given that the uncertainties that's happening in the market. So you can see that both the luxury segment and super luxury segment right now, demand is still quite resistant. And what about the ultra luxury segment above $10 million? What we found is that 41 units were sold over the last quarter. And in fact, this is the number that we saw even before the pandemic over the last 2 quarters. So I went in, I added in this few which were transacted in April. And again, 5 of these properties, they were transacted even after the circuit breaker measures. And this was one of the transactions that caught my attention, which was this 800 square meter Ardmore Park that was transacted for $27.7 million. And this was sold 24 April, which was about 1 to 2 weeks ago. So this was being transacted during the circuit breaker period. So what does this show you? It actually shows you that perhaps even with what's happening to the market right now, the rich and the ultra rich are actually taking the opportunity to come into the market. So the other question that was posed, this was a question that was given to me by CNA. This person was asking me, do you think that the slowdown in China will mean that the foreign buying will perhaps drop in Singapore? So my reply is that you have to see things in perspective, because China is a very huge nation. It's 1.3 billion people, and her growth potential will likely be uneven across different sectors. So it is quite true that in terms of retail and so on, they are also quite affected. But some sectors will continue to do well. For instance, like IT, healthcare, e-commerce, and we know that they are the powerhouse supplying consumer goods globally. So when you look at this whole thing, you'll know that some of the mainland Chinese will continue to do well, and perhaps they may continue to come into Singapore. So what would they do? They will likely divert their funds, because we know that right now China's economy may not be very good, and they may devalue their yuan further, especially right now US is talking about perhaps starting the trade war again. So we will likely see some of these people to continue to come in. All right. Okay, so that is the end of my first part of the presentation. Right now, I'll go into the profit analysis. We want to understand why is it that some of these investors, they are looking at investing during the last crisis. So what we want to do is that we want to look at the profit and loss of homes that were bought during the last crisis. So what we have done is that we look at URA caveats, okay? For this analysis, we do quite a bit of rigorous algorithms and some formulas and analytics in order to do this. What we'll look at is we look at all the new homes that were bought and then after that successfully resold from 2007 to first quarter of this year. And for instance, if you have bought, let's say example, a unit at Caspian in 2009, then if you have resold it in maybe 2014, what we'll do is that we'll look at the unit number, we will match the 2 unit numbers together, and then we'll calculate the profit and loss. And from there, we will calculate the average profits and loss for a particular location. So if you look at this chart here, we managed to match about 15,000 over caveats, which is quite a large sample. Of course, in Singapore, we know that many people buy properties for their own stay or for rental. So this is something that for whoever would want to resell it, we will take those units and then after we calculate. And what we found is that for CCR, or the core central region, which is a proxy for the luxury market, the probability of making a profit is about 7 out of 10 properties, and the average gross profit made is about 330,000. For RCR, which is the city fringe, we managed to match about 4,500 units, and the average profit made is about 240,000. And for the mass market segment, OCR, we can see that the average gross profit is about 190,000, okay, which is, and this number is actually very healthy. It shows you that more than 9 out of 10 properties have actually made profit if you were to resell it during this period of time. And gross profit is about 190,000. But of course, if you can afford to buy a more expensive home, perhaps you may want to consider a home in RCR or CCR, where the gross profit is slightly higher, but of course the chances of making profits might be slightly lower. For here, you may notice that this number is very much lower than the rest because we included properties that were bought during the boom time for those Sentosa units. And we know that during that time, a lot of people bought units there. And then after that, the market was, as in the location, didn't turn out to be as good as expected in that sense. So that explains why. Okay, but by and large, most of the properties in the luxury market was still quite profitable. Okay, so now that we have done this, what I'll do is that we look at what about at which juncture do they buy these properties? Okay, so this chart shows us in terms of the purchase period for properties that were bought. So if you look at here, let me give you an example. For instance, if you have bought a property in 2008, the potential gross profit that you have made would range about 200,000 to about 300,000. But if you were to buy the property perhaps in 2013, the profit that you'll likely make or they had made at that time is about maybe 50,000 to about 100,000. Okay, these are for mass market homes. So you can see from here, if we chart out the purchase period for properties that were bought over the last 17 years, you'll notice that the gross profit made was highest, okay, when the people bought all these properties during the last global financial crisis down here. And you can see that this is the highest profit made even compared to all the other times down here, okay. So what about for properties that were held longer? Because we know that in the past, there were quite a bit of subsales that were going on. So we took away all the subsale units and then we added in the seller's stamp duty, and then we wanted to see for those who want to hold longer term, more than 4 years, that means they sell after completion, you'll notice that the gross profit made is still higher than all other periods if you look at this chart, okay? And if we look at the other market segments, for instance, like the luxury segment and the mid-tier segment, you'll notice that the chart is very similar, where the highest gross profit made seemed to be during the last financial crisis, okay? Bring your attention here to the luxury segment, where you notice that perhaps down at this period of time, there were some losses that were made down here. So for these projects, it could be because they bought it at quite a high price, and this could be a reason why the government implemented cooling measures during this period from 2013 onwards, 2012 onwards, and they wanted to bring prices to a more sustainable level, okay? But generally, if you look at these charts, it shows you that those who bought during a crisis, they generally made more profits than the other periods of time. We have been talking about profits. What about losses? Okay, because we know that during when you want to buy a property during a crisis period, there are certain uncertainties as well. Okay, so when we look at losses, we don't look at the magnitude of loss. Okay, but we look at the number of people who made losses during the period of time. So here you'll notice that those who bought during the last financial crisis, the number of people who made losses also tend to be slightly lower than all the other periods. For instance, at this period where people bought during the height of the means during the time. So if that's the case, so the incidence of making losses could be lower if you were to buy during a crisis, because the price that you are paying is potentially much lower than other periods of time, okay? So with this, we look at what about those people who made the highest profits, okay? If you look at the highest profits, you'll notice that, for instance, like this one, Clementi Woods Condominium, it was bought in first quarter 2007, sold in Q2 2018, about 10 years later, and they made $1.6 million. This is for mass market home, which is pretty high, you know, for the price that they made. And the other one, Clementi Woods also, condominium, bought around the same period, and they sold about 4 years later and made $1.3 million. Okay, so these are all the highest profits that has been generated, almost $1 million after they bought the properties. And you will notice that most of them have bought it either during or just before the crisis. Now we look at the luxury segment. And again, this is something that caught my attention. The highest gross profit made for a luxury home was a $7.8 million property that was bought in Q1 2007 and sold in Q3 2011. So the holding period was about 4 years to 5 years. And this was for a St. Thomas suite unit. And other properties right here, you can see that the gross profit is about $2, $3, or $5 million. So some of these were the Mark, Marina Bay, Nassim Park, residences, and so on. And many of these properties, again, they were bought during or just before the crisis. Okay, so you can see down here, in general, those with the highest gross profit, most of them bought it during the last financial crisis. So now we'll talk about profits, we'll talk about losses. What about the optimal holding period? There have been people asking me, how long do you think I should hold my property? Is it like wine? The longer I hold, the better it is. There are also other people who say that, oh, I think it's better that you sell it fast, because especially for leasehold properties, it's best not to hold it for too long. So we did, again, an analysis. What is the optimal holding period to maximize your profit? And this is for mass market homes. And you'll see that down here, the blue line shows you the number of transactions. And you'll notice that the highest transactions happen just before or during the TOP period, which is 4 to 5 years after completion. And you'll find that, you know, a lot of people want to buy, to sell during that period of time. But the profits that has been generated may not be the highest. But for those people who were able to hold longer, for instance, 8 years, 9, or even more than 10 years, you realize that their profit actually surged quite significantly after that. And in fact, those people who hold it for 8 to 10 years, you realize that their profits in general, in the average profits, is about 300 to almost 400 over 1,000 for a mass market home. So from here, this may give us a gauge that perhaps if you're owning a mass market home, hold it longer if it's possible, maybe about 8 to 10 years, and that would be the time when, you know, you may reap some of the best profits. And from here, we want to look at the subset. What about people who bought it during the last crisis? What type of holding period are they looking at? And you'll notice that for this chart, it shows you, okay, that means it's a subset of those transactions that we saw earlier, from Q3 2007 to Q4 2009. You'll notice that most of these people, they actually achieve the same optimal profits, about $300,000 to $400,000 within 3 to 4 years holding period. Okay, so this actually shows you that if you buy during a crisis, perhaps you may be able to obtain your optimal profits even faster. Okay, so these are for mass market homes, and the chart is quite similar for the other market segments as well. Okay, so that wraps up my second part, and right now I'm going to the final portion of my talk, where we already know that, okay, those people who bought bought properties during the last crisis, they made very attractive maybe profits there over the past few years and so on. So the important question now is that, now that I know it's a good time to buy, so what should I buy? So what we'll look at is, what are the kind of properties that generate the most attractive profits, okay? So which is the best investment? Should I buy a 1-bedroom, a 2-bedroom, or a bigger unit, maybe a 3, 4, or bedroom, or even a penthouse? So we know that many people have been buying the 1 and 2 bedroom because these are good for rental income. But what about the bigger ones? You know, does it mean that it's better? So when you look at this, we are not looking at rental income. We are looking purely at just return on investment. That means you buy, you want to hold it, and then you want to sell. So we want to look at which are the ones that will yield the best profits, okay? Since I cannot see you, I cannot ask you this question to raise your hands. But okay, so I'll just share our analysis. So if you look at this chart, It shows you very intuitively, okay? The blue color shows you the average gross profit. So of course, based on this, it shows you that the bigger unit you buy, then of course, your gross profit will also be higher, right? So if you buy a 4 or 5 bedroom or penthouse, of course, the profit that you generate will definitely be higher than maybe this is called a shoebox or a small format unit. Okay, but this is not good enough for us, because in order to generate this kind of highest profit, that means the amount of money that you have to put in, your purchase price will also be higher. So we need to look at the return on investment. So what is the dollar value that I put in? Which one gives me the best value for money? So it's the same concept. Do I want to buy blue chips, where I know that the return will be better, or should I buy penny stocks? So it's that kind of same concept where we want to look at ROI. So what we do is that we calculated the ROI, and this is the kind of result that we found. And this is across this. Okay, this is not applying to the whole. That means during boom time or whatever. We are just purely at looking at properties that were bought during the last crisis and what was being generated. Okay, so during the last crisis, what we found was that properties that were bought, that means with this size range, 800 to about 1,600 square feet, we find that the ROI is actually the most optimal, 24.4% or 25% down here. Okay, and not too bad for the 1 and 2 bedrooms down here. So these properties are usually around like maybe the 2+ study, 3 bedroom, or even some of the smaller 4 bedrooms down here. And we find that this is the optimal. So for here, slightly lower for the big ones. Well, it could be because some of these buyers, they bought it not to sell for long term. Maybe, most of them keep it as asset, trophy possessions or whatever, okay? But does this apply for all the market segments? So from here, we will look at the 3 market segments. Again, when you look at the 3 market segments, you realize that the highest profits made, well, of course, will be for the luxury segment, where if you can afford the luxury home, of course, the profits that you generate for the biggest unit will be also the highest. So from here, and then subsequently for the mass market and the city fringe. But if you look at here, it's quite good as well. So for instance, if you want the same kind of profit, let's say example, you buy a very big mass market home, the profits that you make is quite similar to perhaps if you want to buy a mid-size city fringe or a smaller or mid-size luxury home. But again, if you want to generate these very high profits, you need to pay a very big sum of money again. So what we want to do is to look at ROI. And when we look at ROI, it looks like it's a bit different, okay? So this shows us that if you want to buy a luxury home, the return on investment looks like is the highest when you buy a mid-size luxury home down here. And for city fringe, it is also around the mid-size units. And for mass market, it looks like the bigger that you buy, it seems like the ROI looks to be more attractive. Especially if, let's say, you are talking about like a smaller unit, a 1 or 2 bedroom mass market, the ROI may not be that attractive. But of course, the qualifier is that this is just purely looking at ROI. When you want to buy a property, there are many other considerations. For instance, you may want to buy for rental. You may want to buy for maybe you like the location and so on, okay? Not everybody just look at the return on investment. But this is just a very broad guideline if you want to see what are the best properties to buy during a crisis that will give you the maximum profits, okay? So the other consideration that you want to look at is to buy undervalued properties. So for instance, and what is undervalued or new homes? So for instance, like new homes, you buy it at the first-hand price. That means you buy it at the lowest price. And of course, the incidence of making a profit will be higher. So if you look at this example of Caspian that was sold during the last crisis, you can see down here, they bought it at a very low entry price of about 580 to 650 per square foot. You can see that almost all of the properties that were bought made profit, okay? And the average profit made was about 500 over 1,000 in about 8 years. And if you look at city lights, down here, this is in the city fringe, also sold around that period of time. And you see that many, 100% of these new homes were actually profitable after they resold it. And in fact, you can see there were a lot of resale transactions, and the average profit they were looking at is about 600,000 in about 4 years, which is quite a short period of time. Okay, so what are, I mean, some of the people will be asking, I mean, I have questions posed to me. So can you recommend me some of the new homes that I can consider, or some of these undervalued properties? Okay, what I've given you are the very broad guidelines, but if you want to know exactly what are the homes out there, I think it's best to ask the experts on the ground. So do speak to our OrangeTee associates or my colleagues to find out which are the best value buys right now, because definitely there are many star buys out there. So in summary, what we have learned is that during the last crisis, yes, prices of homes did fall, but not for a very long period of time. Buying opportunity is very short because we know that sales volume rebound very quickly. A lot of opportunistic buyers or investors are out there. Many are coming in, and in fact, we know that many Singaporeans have already paid up their first property, and they are just waiting for the opportunity to come in to buy their a second or third property for retirement or for their children. So, and Singapore has one of the highest millionaires out there. Okay, and another one, those who bought during the last crisis, what we have seen according to data is that they seem to have made a higher average gross profit. They seem to have a lower probability of making losses. And in fact, those who bought during a crisis, they need a shorter holding period to yield the same gross profits. Okay, so that brings the end of my presentation. Do stay tuned, continue. I'll be answering some of the questions that you may have. But next week, please look out for my colleague, Justin. He's a very, very good speaker, seasoned advisor in the property market. He'll be talking about what are the changes in the residential market dynamics coming up, what can we expect of the market moving forward. So do stay tuned for next week's session during the same time, and in this, that means also through this live stream as well. Okay, so right now I'll be taking question and answer, and right now I'll pass the time to my colleague Ramesh, who will then share with us some of these questions.
Thank you, Christine, for that sharing. I'm sure our listeners found your research analysis very informative and useful for their future property investment plans. Yes, it's time now for the eagerly awaited Q&A session. As I did remind earlier, you could have asked your questions during the session itself, and our panelists have been answering many of your questions, but I'm going to pick some questions that are directed to Christine herself. Maybe I'll start out with this relevant question from one of our listeners, Mr. Wong. What do you think is the immediate outlook for the residential property market, given a COVID-19 environment and the impact of circuit breaker measures? I think this is something that's on everybody's mind. So Christine, what's your take?
Okay, I think something, okay, well, one of the common feedback that has always been given to me is that when you listen to my talk, I tend to be quite optimistic, okay, because I'm Christine's son, always sunshine. Okay. So we are not denying that things will be difficult or can be difficult in the coming months. But so what we are seeing is that it's true that perhaps price and demand weakness, we may experience some price and demand weakness moving forward. Already we are seeing that, you know, if you read just last week's papers, they talk about HDB resale volume has actually dropped to 30-year low, and this is something that we have never seen. But I think we need to make a very clear distinction here, because the sales volume that has dropped is very much to do with the circuit breaker measures. People will want to buy, people will want to sell, but how are they going to do it if the show flats are closed and even sellers cannot conduct viewings, you know? So, but it's already quite remarkable that even for HDB market, they sold about 400 over units. And recently I look at what about the private market, notice that in the private market for April, we are expecting about 600 over units to be sold actually. So across the whole private segment, that is to say. So you can see that perhaps what we are expecting is that, okay, in terms of total sales volume for this year, it's unavoidable. I think it will be lower than last year. But in terms of prices, I'm not quite sure what would be the very, would there be a big fall? But definitely, I think there will be some softening, especially for some of the segments.
Thank you, Christine. Another question from Annie. I think it's quite related as well to the first question. Given the future economic uncertainties, do you still think properties are still a good investment asset?
Okay. Okay, I think that this was also the same question that was posed to me when I recently did a podcast interview with CNA. Yes, I think that if you ask me, we have to put things in perspective, because property purchase or property investment is not very okay. Right now, okay, in terms of speculative demand is actually very low because of all the cooling measures. So in that sense, when you want to talk about property investment, you always have to look at the long-term view. What do you see for Singapore in the long term? So to me, I feel that there are certain fundamentals that will remain unchanged even with the pandemic. For instance, why are so many foreigners coming into Singapore? Because they believe that, you know, when they park their properties here, there are certain things that are quite, I mean, it will remain unchanged. For instance, like, you know, one of the safest countries in the world, transparency, ease of business. And in fact, if people who are buying properties for rental, the rental market had been very strong in Singapore. In fact, the occupancy is way above 90%, which means that the probability of you finding a tenant is a very high chance in the long term. So for all this, you know, and earlier we also talked about capital appreciation. We saw how prices have been rising over the past maybe 30 years and weathered through many of the past crises. So this is something that we need to put ourselves into perspective, which is, do you still believe in that's what they call the Singapore story? Do you think that because of the pandemic, some of these fundamentals will change? For instance, suddenly, you know, Singapore will not be safe anymore, you know, will not be transparent anymore, you know, which I don't think so. So if you ask me, you know, do you think it's a very good, do you think that Singapore still holds that value in the long term? Then I think it should.
Yes, I agree. Singapore always has a reputation for being a safe haven, and the fundamentals are always very strong. Another question from an anonymous listener. You did mention prices may soften. How much do you think prices could drop?
Okay, I think that's a very tricky question and not easy to answer. But I think it's anybody's guess, and I'm also quite interested to know, you know, how prices will fall. But okay, but what I think is that what we can see is that from the past, if you maybe I just reorganize my thoughts. Okay, if you look at the recent articles, I remember that there was this study, consumer sentiment study or something that was done by NUS and was shared by Reuters. I think some of the analysts were predicting that prices for homes may fall about maybe 5 to 8%. Some were projecting about maybe even slightly more than that, and so on. And I know that out there are even analysts that talk about maybe prices may fall 20 or 30%. So I'm not sure. Do you think so? You know, if prices fall to that level, please inform me. But what I think is that for our house view is that we think that prices possibly may trend about -3 to about 4% for the whole of this year, which is already pretty significant if you look at the history of Singapore. Then of course I've read reports where they talk about, you know, during the last crisis where prices seems to have fallen about 20%. I think was the last, I think 1997, the Asian financial crisis. But I think we need to again put things in perspective, because you're comparing now and almost like that's like what, 25 to 30 years ago, and no, sorry, maybe about 20 years ago, which is pretty long time. And you look at the whole environment. In the past, there were no cooling measures that were implemented. But right now, we have many safeguards in place, for instance, like TDSR, ABSD, and so on. And with all these safeguards, right, it's quite likely that those people who have been buying over the past few years, they probably could have afford to buy these properties. So in the past, prices have fallen into that level because there were a lot of fire sales. People couldn't hold the properties that they have bought. But right now, already, those who can buy, financially, they should be quite secure in a certain extent. And the other consideration is that we need to look at the environment. At that time, interest rate was very high. In fact, I went back to look at what was the interest rate in the past. It was almost like maybe 5 to 6% and even touching almost 7%. So that brought a lot of hardship to people who were saddled with quite heavy loans at that time. And of course, during that time, I think people's salary was not that high, you know, in that sense. So that kind of environment, and you compare it right now. In fact, right now, interest rate is almost very, very low. And the government has also given like certain helpline in that sense. That means they allow people who really need help, they can, what do you call it, delay their mortgage payments and so on. So that prevents some people, you know, from really selling their units in desperation and things like that. So this is the kind of environment that we're looking at, and perhaps the fall may not be as much as what we saw in the past.
Thank you,
Okay.
Christine. The more I listen to you, the more I learn stuff myself. We have a lot more questions coming in. Unfortunately, we are pressed for time because it's already 4 p.m. So I'm just going to take one last question from the listeners. I think this will be quite an apt question to sum it up. So Christine, we have we have a listener, Peter, asking, what is the greatest risk in buying a property now?
Okay, I think just now I didn't really elaborate too much. I think the greatest risk in buying a property right now will be your own financial or job security, to be honest. Because end of the day, you know, whether how much prices will fall will definitely depend on other factors like, you know, rate of unemployment and how many people are going to suffer job cuts. What we are looking at right now, I think as of now, we are still not hearing like massive job losses and things like that. Not quite like what we saw. I think even, was it in 2008, I record almost on the front page on newspaper, we see like many, even banks and many firms, you know, they were already cutting in thousands of people. So this is something that it will be a key consideration. So when you want to buy a property, you may want to look at your own financial, that means your health in that sense, whether what type of jobs you are holding, you know, are you holding a very high risk job? If you are in one of those very, you know, kind of stable environment and essential service, and you think that, you know, or the chances of the market recovering for your sector is quite high, then perhaps it may not be that bad. So instead, you know, for these people, especially for those who have been waiting for a long time, this may be an opportunity for you to maybe, you know, take advantage of perhaps the price correction that may occur for some of the locations. Yeah, but I think this is a very good question. I think to sum up, you know, for my talk, I also want to put a qualifier to say that we are not here to tell everybody to start buying properties. I think there is also a place of prudence. So do look at your own financial health, whether is this something for you. But if you have been looking for a property to buy, you have been waiting all these years, such opportunities do not really come by very frequent. You know, in fact, the last time when such a thing happened was 12 years ago. So you may want to maybe consider this period, you know, not many 10 years in our lifetime. So, you know, so you may want to consider that. Yeah.
Thank you so much, Christine, for all your valuable sharing and advice and all the questions that you have answered. A gentle reminder to all the listeners, if you'd like to obtain a copy of Christine's presentation report, feel free to approach your representing OrangeTee and Thai agent for a copy. Also, be sure to tune in to another OrangeTee and Thai Consumer Empowerment webinar session next Sunday, same time at 3 p.m. Our esteemed speaker, Jeslyn Tan, will be talking on an intriguing topic entitled Defensive Play, the Fundamentals of Singapore Property Market. If you want to find out more, be sure to tune in again next weekend. That brings us to the end of today's session. I hope all of you found it as useful as I did. For listeners who still have questions, we will keep this session open for approximately another 15 minutes while our panelists address their questions. So you may still key in your questions and we will answer all the questions that's coming in. That's all for me today. Thank you, everyone, and have a very beautiful Sunday evening. This is Ramesh signing out. Thank you.